Let's get it. Like I say, I always tell you all, everything that you do, everything that has ever been conceived starts in the mind first. So you first have to believe that you're a billionaire, a millionaire, a thousandaire for that fact. Whatever it is, you have to believe it in your mind before it ever comes to fruition. You have to manifest it within you before anybody ever sees the first hint of it. You have to already become that in your own head. I know it may be difficult for some because that's not what we were taught, but you have to unlearn what you've already learned in order to become who God presented you to be in from birth. Everything that you ever needed was put into you from birth. An acorn, a smaller acorn, grows into a 50-foot hard oak tree. A little, not even a good ounce. Acorn grows into a 50-foot tall oak tree. It had everything that it needed to grow into that oak tree from the very beginning. And that's the same thing each and every one of you on this call has. You are that acorn. And right now you are in your developmental stage in order to become that oak tree. So y'all let go of what you have learned all these years, however many years old you are. Let go of all of that stuff and start to relearn and unlearn so that you can become who you have always been. Do something different and become great, because you are greatness manifested. So I turn the call over to Miss Benita. Like I said, we're not going to be long. You just need to be prepped for what we're going to start on. Take it away, Miss B.
Thank you, Mr. Kimbrough. Before we started, I want to acknowledge some of the comments in the chat. I see Kimberly says she closed her kitchen early so she could get on the call. That's what I'm talking about. Dedication. That's what I'm talking about. And then Danielle said that she already got 4 people that's going to be on the call tomorrow. So y'all better get on the ball, because she already got 4 people that's going to be on the call tomorrow. So, hey, let's get with it. Let's get with it.
Hey, Miss B.
Yes.
Miss Mincy on the line. Miss Kimberly Mincy.
Yes.
Didn't I put a personal challenge out to Miss Mincy? Miss Mincy, didn't I do that with you?
Yes, sir.
Oh, what's happening? You know you behind, right? I just want to say, I don't mean no harm. I just wanted to say that you behind. I'm whooping your butt right now. Let's go.
She on it. She on it. Ain't that right, Miss Kimberly? You on it?
I'm on it. Leave me alone. I'm on it.
Okay. Let's get it. Let's get it. Shoot, let's get ready to get these people on this call tomorrow. And let's get ready to start doing some live trading calls on Monday. Who's ready? Who's excited?
I'm like a little baby. Me.
Hey. Yes.
Very excited.
Okay. So as always, you guys know that, with this company, we do have to give the disclaimer. So let me get that up. Right. And so what I have to let you know is that every effort has been made to accurately represent this product, service, and its potential. In terms of earnings, there is no guarantee that you will earn any money using the techniques and ideas in this material or on this website. Information presented on this website is not to be interpreted as a promise or guarantee of earnings. Earning potential is entirely dependent on the person using our product, ideas, and techniques. So do you know what that's saying? That's saying what you do, what you earn, what you accomplish is up to you. You are the master trader. You are the I am, whatever those affirmations are, you are. So let's get it, guys. You can't sit around and wait for somebody else to do it for you. That's not how it works. So we're gonna go ahead and get started. Okay, so the Forex market versus other markets. I want you guys to understand. The New York Stock Exchange does $28 billion a day. Equities market does $191 billion a day. And the futures market does $437.4 billion a day. The Forex market, which we all have access to, now this is actually old information because since this was printed, guys, it's now over $6 trillion a day. Guys, that's enough money for all of us to get a piece of. And that's what we're here for. That's what we're going to do. We're here to get a piece of that. Because for every no, your hands are clean. Present the offer. Get this information out there and let them know. Everybody needs to know about this. Guys, this is such a blessing. Everybody needs to know about this. And if you keep it to yourself, I say that you're being selfish because you're blocking somebody else's blessing. You don't know what a person is going through. You don't know what a person is dealing with. So don't say, they're going to say no. You don't know. Make the offer. Put it out there. All right. Okay, now the Forex market hours. So, of course, this right here, this is going to be hours, 5 in the morning. Guys, do you see it's open 24 hours a day, right? I mean, here's hour 1 all the way to hour 24. And there is a market open during every one of those hours. The time that we're going to be in is going to be the London time. So we'll be in the London session making money, right? Okay. All right, so the New York market opens at 8 a.m. until 5 p.m. Eastern Standard Time. Tokyo's is 7 p.m. until 4 a.m. Eastern Standard Time. There's no time that you guys can't be making money. Even on the weekend, the cryptocurrencies are open. All right, let's see. And then Sydney opens up at 5 p.m. Eastern Standard Time until 2 a.m. Eastern Standard Time. And then here's our London session from 3 a.m. until 12 noon. So we're going to be in here, the 5 a.m. session. The best trading times of the day. This is why you want to get up early. 2 a.m. Eastern Time or 3 a.m. until 10 a.m.
Benita, you out.
Say that again. You said
Benita.
Kimber?
Miss Benita, your mic is going out.
Okay, and I do see that it's saying that my internet is unstable. So hopefully we can get through this, guys. So like I said, I'm not going to be before you long, but I do want to give you this very important information. Okay. The 18 pairs of high liquidity currency. High liquidity currency, these are the pairs of the high liquidity. These are the pairs that we'll be looking at. Guys, don't look at all of them. That's a lot. That's a lot of currency pairs. When you're getting started, all you want to do is pick out 2 or 3 currency pairs and follow those currency pairs. Follow them, learn them, understand them, get to the point where you can feel them. You can look at the market and know what they're getting ready to do because you study them like that. Okay, so these are the currency pairs that we'll be looking at. Okay, now this is something that I put in the group chat on WhatsApp. This is what you need to know about the lot size and how much it will get you per pip. Okay, so I'm not going to go through each and every one of them. You guys can see it. If you didn't get the information out of WhatsApp, let me know. I can put it in there again. But a 0.01 is going to get you 10 cents per pip. Okay? Now remember, we don't recommend you, recommend you like starting in somewhere between here. So 0.3 is going to get you 30 cents per pip. And we do not recommend going over 0.5. Not yet. Not until you have built up your account, not until you are confident and sure in what you're doing, do you want to start going up. Now, I will tell you this, the US 30, it's a standard lot size, which is 1. That's gonna get you $10 per pip. And this is why we're telling you guys, we're not telling you what to do, but we are recommending for you not to start out doing the US 30. Because just like that one pip will gain you $10, when it starts going into the negative, it's gonna start taking away $10. So you wanna make sure that your account can support the pullback. Remember, I was telling you guys, anytime you get into a trade, that's what you can expect, is you get into a trade and then it's gonna experience some pullback. But if you've done your analysis and you've looked at it and you've checked it out, hey, ride that pullback as long as your account can sustain it. Okay? Okay, this is something else that I put in the chat, which is the compounding growth chart. And it is an Excel spreadsheet, which means you guys can change it. So for instance, if you were to start your live account with $300, your goal for your first trade is $30. That's all. That's it. You're not trying to break anybody's bank. You don't want to break your bank. You don't want to, $30 because it's going to grow. All right. So remember, you're looking at, if you start at 0.03, you need 98 pips. 98 pips is going to get you your $30 that you're looking for the day, close to it. If you do 0.04 lot size, your total pips that you're looking for is 73 to get you close to that $30 for the day. And then tomorrow is another day. You will have grown your account by $30 for the day. The next day, you're looking at profit of $33. That's your goal, $33. Okay? Now, again, if you don't have it, if you need it, let me know so I can post it again or get it to you. All right, so I want you guys to understand the candles, okay? You have a bullish trend and a bearish trend. So you think about the bull. Bull is green. The bullish trend is the overall direction of the market is up. So it's called a buyer's trend or uptrend. So when the market is going up and you see those green candles, that's a bullish trend. The bearish trend is going to be just the opposite. It's the overall direction of the market is going down. So it's called a seller's trend or downtrend. So when the market is in a sale, that's called a bearish trend. And you know, the beautiful thing about it is, it doesn't matter if it's a bearish trend, a bullish trend, we're making money either way. Both ways, baby, we making money. Now, they can't say that in the stock market. In the stock market, when it goes down, they're losing money. Not us. We gaining money. No matter what direction it's going in, we're going to do our analysis and we're gaining money. All right, so we're going to be doing pending orders. Pending orders is something that we're going to be getting into. So pending orders, it's a buy stop, sell stop, buy limit, and sell limit. Now, the diagram is pretty self-explanatory, but I'm going to explain it anyway. So we start at the buy stop, and basically what that is, you're looking at the chart, and what you're saying is, based on your analysis, you look at it and you say, when it gets to this price point, it's going to keep going up. So what I'm going to do is I'm going to set a pending order, which is putting in a trade, but not doing a market execution. And we're going to show you guys how to do that. So that way, once it gets to that particular price, your pending order is going to activate. The sale stop, you're looking at that chart and you're saying, okay, I'm doing my analysis. I can see, okay. So what I'm going to say is, at this price point right here, it's going to keep going down, and this is when I want to get into the market. So at that point, what'll happen is your trade will activate, and then it'll start. And like I said, we're going to show you guys how to be doing the pending orders. So we're going to show you guys how to do it, how to set it up. And Mr. Kimbrough, you want to take the limits?
Yes, ma'am. Can you hear me?
Yes, sir.
Y'all, like she said, these pending orders, we're going to teach you how to do them. Usually I just go in, because of the strategies that we have, I just go in and do market execution. Now, when we want to do pending orders, because we're setting multiple take profits, this is where these come in. Usually I don't do the limits, but we usually do the stops. But for those of you that want to get into the, you know, the more advanced parts of doing like the pending orders, the limits are basically like with the buy limit. It says order placed below on the price, and then it goes up. All it does is a reversal. You're going to get to it goes up to the breaking point, and once it hits the point, it's just going to turn around and it's going to go back the other way, the way that it was coming from the beginning. So it like does a 360. It just turns around and goes back the other way. So this is what you're anticipating when you're looking at the market. Once you've done your analyzation, what you're basically saying is, when you put your support and resistance, when it hits your support or your resistance line, then it's going to turn around and go back the opposite way. So the sell limit is the opposite of what the buy limit is. It means that you're going to place your order above the price. Whatever the market price is at the time, you're going to place it above it, and then you anticipate that it's going to turn around and go back down. So that's, in a nutshell, like I say, it's a little more advanced. So you really don't want to, you're not going to get into that right now. And like I'm saying, you're probably not going to do it for a long time, because even now I still don't really put in any limits. I don't try to anticipate it reversing itself immediately, although I can. But for me, I just don't want to do it right now. It's much easier to put in a market execution and then turn around and do a buy stop or sell stop, because you think that it's going to keep going in the same direction. So in a nutshell, we're still going to teach it to you, because you need to know everything about the industry that you're in, but it's going to be your choice on whether you actually want to execute one or not. Miss Benita, back to you.
Yes, sir. Thank you. And if I can say, you know, when those pending orders come into play is, you know, we're only suggesting you guys do 10 or 20 pips and then you get out. Well, if you see that, you know, guys, we're doing the alligator. If that alligator's mouth is wide open and you see that it's going to continue, then that might be a possibility of when you can go ahead and do a pending order, or wait until your order closes and then do another market execution. Up to you. But we're going to show you so that you know what it is. All right, so I want you guys to understand the trading window. So when you're in the MetaTrader 4 on your laptop or desktop, I want you to understand what you're looking at, okay? So can everybody see my cursor moving?
Yes, ma'am.
Thank you so much. Okay, so this first line right here, this is going to be your balance. Okay, your balance is the actual money you have in your account when you have no trades open. Okay, so this is your balance. Equity. The equity is your balance plus floating profits or losses. Now, once all trades are closed, this becomes your new balance. So what this means is, if you can see, there's a trade open. There are several trades open, actually. And so they're in the negative. So you can see what the balance is, and you can see what the equity is. And that is because those trades are running in the negative. Now, if that was a plus sign, this equity would be more than the balance because it's going to be above. That's nuts. Okay. All right. The margin. The margin is the amount of money needed to open up a new trade with your broker. It acts as a down payment to get in a new trade. So the margin is what your broker looks at as far as what you have to be able to get into another trade. And this will fluctuate as you're in your trade. It'll go up or down depending on, you know, how much money is going up or down. Free margin. The free margin is the money that is available in your account to trade with. So if you look at this right here, this is less because of this right here. So the equity and the free margin are kind of coinciding with this. So if you look at it, the equity is mixed with the margin and the free margin. Okay? Now, the margin level is the ratio of your equity to your margin. Now, let me tell you something about this right here. If your margin level drops to 100%, that means the equity is equal or less than the margin. You will not be able to open another trade. So when you're in your trades, guys, you do want to make sure that you're watching these numbers. These are very important. You want to make sure that you're watching these numbers. Okay. Now, you never, never, ever, ever want to have too many trades open at one time. Now, there is a strategy that we're going to be working on that we're going to be showing you guys later. Not yet, but later. We're going to be showing you guys another strategy. Like Mr. Kimbrough said, we don't want you to get lazy. So we're showing you the alligator strategy first, and then we're going to show you that other strategy where you will have more than one trade open. And that's where those scripts come in that I had you guys add to your MetaTrader 4. Okay, so I do want you to know the higher the margin level, the more free margin you have available to trade. So for some of you, you know, with CoinX, I was telling you about the credit, okay? So basically what you would be looking at is you would be, say for instance, if you started your account with $100, you would see $100 here. You would see a credit because you can get a credit up to $100 from CoinX. So you would see balance $100, credit $100, and then that's going to mean that your equity is $200. So do you see how that that credit helps? And what that's going to do is it's also going to help with the pullback. Because remember I said, anytime you get into a trade, that's something that you're going to be faced with is pullback. So you want to make sure that your balance is enough where it will support and sustain and not kick you out. If, for whatever reason, you go too far, your trades are running in the negative too far, your line will start getting a sort of a pinkish, reddish color. And what can happen is you can bottom out your account. So that's why we tell you proper risk management and start with 0.01 up to 0.03, anywhere in there when you're first starting out. And practice, practice, practice in your demo accounts. Get comfortable, get sure, get positive. And my suggestion to everybody on this call, I know you're excited, I know you're ready to start making money, but what I'm going to tell you is when you're in your demo account, I want you to practice and I want you to get 13 consecutive take profits, 13 wins before you go into your live account. Now, what that's going to do is that's going to make sure that you understand what you're doing, you understand the market, and it's going to build your confidence. So when you see that you have gained 13 consecutive trades in profit in a row, then if you're ready to get into your live account, proceed with caution. Because it's up to you. You are the master traders. This is your baby. This is yours. This is on you. We are here to help you. We are here to make sure that you guys have all the information. We don't want to, you know, like I said, we're always here for you guys. If you have any questions, if you need any help, all you have to do is reach out and we are here. We are available. Okay, now, did
Excuse me, Miss Billionaire.
you have any? Yes, go right ahead. I was getting ready to say that.
I got a question. Now, since we're doing this on Monday, would you say it's better for us to stay in our demo accounts if we're more comfortable in our demo accounts, or are we going straight live?
No, we stay in your demo account. We're going to be practicing together live in the market in your demo account.
Okay, perfect.
Okay, because I don't want anyone, you know, being unsure, being uncomfortable, you know, not feeling like they're ready. So when we start on Monday morning at 5 a.m., we're going to be live in the market doing the alligator strategy in our demo accounts. Does that make sense, everybody? So please don't feel like you have to log in Monday morning in your live account. Okay, thank you, thank you. Any other questions? Any other questions? Guys, now is the time to ask. I promise, no question is a dumb question. If you have a question, I promise somebody else has the same one. So please feel free, if you have a question, go ahead and ask now. No questions? Okay. Well, that is actually our training session for today.